If you take a step back and look at the history of the semiconductor industry, there is perhaps no greater turnaround story than that of advanced micro devices. For decades, AMD was the perennial underdog, always fighting for scraps left behind by Intel. But if you look at the financial documents we have analyzed, from the foundational shifts in 2020 all the way to the critical quarterly reports of 2025, you will see that the underdog narrative is no longer relevant. We are witnessing the maturation of a technology giant that has fundamentally altered the computing landscape. Today, we are going to go deep into the numbers and the strategy. We are not just looking at stock prices. We are looking at the architectural changes in their business model that signal where this company will be in 2030. We will explore how AMD transformed from a PC-centric company into a data center powerhouse, and why their aggressive pivot into artificial intelligence in 2024 and 2025 is setting the stage for a massive valuation re-rating. To understand where AMD is going, we first need to appreciate the precision of their execution over the last 5 years. The 2020 and 2021 annual reports paint a picture of a company firing on all cylinders in the consumer market. Ryzen processors were taking market share from Intel at an unprecedented rate. But Dr. Lisa Su and her team saw something else on the horizon. They knew that relying on gamers and home PC users would not be enough to reach a $1 trillion valuation. They needed to own the enterprise. They needed to own the cloud. The acquisition of Xilinx, completed in early 2022, was the first major clue. Critics at the time said it was too expensive or a distraction. However, looking at the 2025 financial data, we can now see that Xilinx was the bridge to the embedded and adaptive computing market sectors that provide sticky, high-margin revenue when the cyclical PC market slows down. Now let's fast forward to the core of the growth thesis, the data center. If there is one thing you take away from this analysis, it should be the absolute explosion of the data center segment. In the annual reports from 2020, data center revenue was a growing but secondary part of the story. By the time we get to the Q3 2025 report, it has become the engine of the entire company. The EPYC server CPUs have not just caught up to Intel's Xeon in many metrics of power, efficiency, and total cost of ownership. They have surpassed them. Cloud giants like Amazon AWS, Microsoft Azure, and Google Cloud have aggressively deployed EPYC processors. This shift is sticky. Once a data center optimizes its racks for AMD's architecture, they are unlikely to switch back unless the competition offers a generational leap in performance, which we have not seen. But the CPU story is yesterday's news. The story of 2025 and beyond is the GPU, and specifically the MI series accelerators. For a long time, the market believed that Nvidia had an unassailable monopoly on AI training and inference. AMD's 2023 and 2024 reports showed heavy R&D spending, a sign they were preparing for war. In 2025, that investment began to yield real fruit. The MI300 and its successors, detailed in the latest quarterly filings, are not just alternatives to Nvidia for certain workloads. They are becoming the preferred choice due to their memory bandwidth advantages. The financial impact is visible in the data center revenue lines of the Q2 and Q3 2025 reports. We are seeing a hockey stick growth curve in GPU sales that mirrors the early days of the Ryzen revolution, but on a much larger, more profitable scale. Let's discuss the software ecosystem, historically AMD's Achilles heel. Hardware is useless without software, and Nvidia's CUDA moat was deep. However, the documents reveal a strategic pivot towards open-source collaboration. The ROCm platform has seen rapid iteration throughout 2024 and 2025. By partnering with open-source communities and major hyperscalers who want to break free from proprietary lock-ins, AMD is building a coalition. They aren't trying to beat Nvidia at its own closed garden game. They are building an open alternative that appeals to the biggest tech companies in the world, who are desperate to lower their AI compute costs. We must also look at the client segment, the laptops and desktops we use every day. While the post-pandemic hangover hurt this segment in 2022 and 2023, the 2025 data shows a resurgence driven by the AI PC. AMD was one of the first to integrate neural processing units, or NPUs, directly into their Ryzen processors. As Windows and other operating systems begin to run local AI models for things like real-time translation, content creation, and personal Assistance, the demand for these specialized chips is driving a new upgrade cycle. This provides a steady baseline of cash flow that fuels the more capital-intensive data center ambitions. Analyzing the balance sheet across these 5 years reveals a company that has become incredibly disciplined. In 2020, they were still proving they could be profitable. By late 2025, despite massive investments in R&D and supply chain security, the free cash flow generation remains robust. They have managed their long-term debt effectively, most of which was acquired during the Xilinx transaction, and have continued to return capital to shareholders through buybacks. This financial stability is what allows them to take risks on multi-year roadmaps that smaller competitors simply cannot afford. So, what does the future hold? Based on the trajectory established in the Q3 2025 report, we are looking at a total addressable market for AI accelerators that is projected to reach $400 billion by 2027. Even if AMD captures only 10 to 20% of this market, it would effectively double or triple the size of the company compared to its 2023 levels. The growth is not linear, it is exponential. The convergence of their CPU dominance with EPYC, their rising GPU status, with the Instinct line, and their pervasive adaptive computing through Xilinx, creates a unique end-to-end AI portfolio. They can power the server, the smart network card, the edge device, and the personal computer. In conclusion, the journey from 2020 to 2025 has been about building the foundation. The volatility we see in the stock price often ignores the underlying architectural strength. AMD has successfully diversified its revenue streams so that it is no longer dependent on a single cycle. They have successfully integrated a massive acquisition, and most importantly, they have successfully positioned themselves as the only viable alternative to Nvidia in the most important technological revolution of our lifetime. As we look toward 2030, AMD is no longer the underdog. It is a foundational pillar of the global digital economy. For the long-term investor, the data suggests that the best days for AMD are not in the past, but squarely in the future.